Will, I want to have a conversation with you interpreting investor signals because I think
Boy.
so many founders, and we talk about this a lot. You've had so much experience with investors, and we want to talk about what do investors mean when they ask specific questions. These aren't the implicit questions that are asked. I compiled these as the sort of subtext, the unspoken questions that
We're
investors are
so
going to be
overdue.
asking, right?
And we're so overdue for this chat. It's time. It's time.
So this is for everyone out there, and you're talking to an investor, and you have to understand an investor immediately has this in their mind. And so I'm going to start off, and well, feel free to go wherever you want. But the first thing they ask is why now?
Right.
And what does that mean? And how do we approach this as founders?
They're saying, why is there momentum? I want to invest in an industry that has momentum. You know what I don't want to do? Invest in an industry that has no momentum that I'm hoping will get momentum. Okay. So if I were to say, let's go back to Doug's product, right? Why now? If I'm Doug, I'm saying, hey, because AI is everywhere, but it's doing a really bad job and it's creating huge opportunities for us for people like, okay, this didn't work. Now what? So the why now is that the AI dropping the ball is literally printing money for us.
Right. Combined with the creator economy, video communication
Exactly.
becoming more of a thing.
Exactly. So what I want to do when I answer why now is I want to be able to say there is a mega trend happening right now where there's so much momentum, there's so much demand that is about to crash as a wave in a good way. And we have to be part of this wave. If you're an investor, if you have a choice between, like I said, investing in a market that might be something someday or investing in a market that is already moving like crazy, you want to go with the one that's moving like crazy because there's a million ideas that were chasing a market that never came. There are very few ideas that have a market that's already taking off and you can become part of that.
But Will, what about those founders? Many could argue that I see something that nobody else sees, and
Mhm.
this will be a market out there. What do those founders do?
Yeah, okay. So there's a very big difference between saying I see something that nobody else sees and I see something that no one else will see. Right. In other
Gotcha.
words, in other words, I already see the momentum. I already see the traction happening. I already see where the puck's going to be. Now, like anything else, it could not be as big as we thought, but you can already see the data pointing to this is where things are moving. This is where the momentum's happening. Ed, like you said, years ago, I might have said, look, this creator economy thing is starting to become a very big deal. There are more and more people that are actually getting their own shows on YouTube where they're starting to matter. There's this new guy out called Mr. Beast, and he's actually starting to get a lot of viewers, and he's starting to attract serious ad dollars. We want to get in front of people like this and start to build a tool for them before they become the next NBC.
You're saying it's okay for founders to live in the future, but you want to catch the wave and you want to show investors that this is going to be a mega trend. It's already happening now. Get in on it.
Yep. And again, the old Wayne Gretzky quote, I wasn't faster, but I always knew where the puck was going to be. As a founder, you're basically saying, see where that is right now? Here's the direction it's moving, and here's the speed that it's moving, and we want to be over there before everybody else is.
I saw one of the partners at A16Z. He was saying secrets bring people together. So
Oh,
if you
that's
can
interesting.
share a secret, like an insight,
Oh,
then
yeah.
going to get investors interested. The other factor will a lot of investors will think is why is this going to work now when it's potentially been tried before? For
Yeah, what's changed?
example, VR, right? They've tried it, billions of dollars sunk into it, hasn't hit that inflection point yet.
Yep.
So if you're working on a VR project, why now? Why will it work now when we tried it before? Which they're open to having that conversation.
Yep.
But I also liken it, let's dovetail some of these examples. There were people 15, 25 years ago that said ethics in AI is going to be a problem. They saw it a mile away, right? They saw it, but it just, the inflection point wasn't there. And so
Right.
they got no support, anything. But now today, because people are seeing that it's imminent, there are tons of companies now getting funded to handle
Right.
the ethics of AI.
Right. And so at the time, and let's say you and I are co-founders in this, ethical AI business. And 5 years ago, we're trying to pitch it. Nobody's buying it because AI hadn't hit an inflection point yet. And they said the why now. And what we would say at that time is the market isn't ready for it yet. It's a couple years out. But we have to be prepared because when it turns, there's going to be, you can't be ramping up at that point. You
Right.
have to have already been there in order to catch that wave. So as we see the timing and we're trying to convince the investor of how we put together that timeline, if we make the investment now, we will reap the rewards when that turns.
How do founders incorporate the answer to why now in their pitch decks?
Well, some people actually use a why now slide,
Sure.
which I think is in the Sequoia deck. For me, the why now slide only makes sense if there is a very specific trend that you're trying to highlight. Not every startup is part of a highly specific, very obvious trend. Okay. So, for example, if I were to have gone years and years back around diets, right? Think of like the Atkins era, right? if I were Professor Adkins and I was like, listen, more and more people are trying to get on diets, but diets don't work. What we're starting to notice is that there's certain eating habit diets that actually are working, right? Mine is a low carb, kind of ketogenic type diet. Then I'd want to talk about here's where the trend's going. But for other products, like some people are launching products where like it's a $300 billion market. The market's been well established. Like, in other words, if you're building something into the real estate space, it's a wildly proven market, right? Like your version of what you're doing isn't differently, but you're not going to create the real estate market. So depending on the product
and how you communicate it. For example, I know we've got some crypto my people in the audience doing apps. You could easily make an argument, such as Coinbase said, we're ahead of it. Bitcoin is incredibly hard to buy, trade. Yep. And so we're going to create an exchange to do that. And the gang at Y Combinator, they saw that coming, and that, went public for billions of dollars, right?
They just hit the S&P 500. They
wow.
got the S&P 500, like last week.
So you could argue, and this is a Sequoia method, they say timeline. You could say Bitcoin started off as some weird anomaly thing. Today actually is or yesterday or today is the anniversary of someone actually buying pizza with Bitcoin for the first time. And then you could talk about regulatory approval, market cap, and say Bitcoin is just hit an all-time high. It's bigger than ever, and therefore the market is going to be there. But like you said, if I said that with just regular stock trading or the market, an investor would be like, I really don't need to know this, so you don't have to explain it to me.
Agreed. Let's see what other questions we got, Ed.
Next question. So if you can't answer the why now in the same way, just you're always going to be talking about why now. But let's say you are in one of those industries, such as payment processing. I'm just going to use a time old one. Then the investor is in their mind looking at your pitch deck saying, what's different, right? Now, the question for you, Will, is because I see a lot of founders, they think they're different, but there's a difference between, we're just marginally different, like 10% different, than an order of magnitude 10x different, which is where startup investors want to be.
And I think one of the pitfalls that founders run into when they answer the why we're different, they immediately start with, here's where the competition is broken.
Gotcha. Yeah.
Customers don't buy from you or somebody else because you have competition. Customers buy based on what they want. So what we need to say is what customers want right now is XYZ, but they can't get it from the existing competition. There's a subtlety to what I just said. Most people, like I said, will run in and say, here's why competition sucks. Here's why the market sucks. They do that at the expense of making sure that the investor knows what the customer is dying for. The pitch deck should be entirely based around the customer's problem. Every slide should reflect the customer's problem in the fact that we're going to be able to solve it.
But Will, so many founders make themselves the customer. We need to talk about this because in their mind, I'd use it. It's the greatest thing since sliced bread. That's what makes it different. I'm part of the equation. You're talking about actual customers outside of the founder.
Correct. It was. And so I think part of the problem is in a lot of the slides in a pitch deck, and I'm just using that as a reference point. In a lot of the slides in the pitch deck, they keep referring to the product. They keep referring to competition, et cetera. And what I'm saying is the core element should constantly be, this is what users need, okay? So when we're talking about why you're different, the first thing I would say is, remember, this is what customers are trying to do the most. This is what's pissing them off. And the reason we're different is because we're solving exactly that. When they try to go to someone else and do this, they can't solve that problem. But they come here because it's exactly what they need. Ed, let me give you an example. If you were to say Startups.com, why are you different, right? And you say there's a lot of places people can go for help. They can go to YouTube and watch videos. They can join, some other incubator, et cetera. And a big part of what I'll say is for a lot of the startups that we work with, they can't go somewhere else for help because their stage of startup or their industry of startup doesn't sync. So in other words, I just talked to a customer a moment ago, one of our founders, who's building a new jump rope, right? It's awesome. It's actually really clever the way they're doing it. But where are you going to go? Y Combinator, right?
Exactly.
That makes no sense, right? And to be fair, most people are starting some version of a non-consumer tech B2B SaaS business. Now, don't get me wrong. There's plenty of those even on our site. But most people can't get that help. So what I'm saying is, hey, a lot of our customers, for the type of help they need, they don't just need fundraising help. They need help with how to build their marketing plan. They need help with how to staff. They need help with how to deal with an issue with their co-founder. We deal with all the stuff that no one else deals with. That's why people use it.
Yeah, it's a great way to differentiate yourself. You just say, this is how we're going to separate. And it goes back to, here's the gap that we're servicing. Maybe you're saying we're different because we're solving a problem that's underserved, underrepresented, underestimated.
100%, right? And all the people that are on this call today, that's why they're here. right? They understand that.
Well, I want to highlight again, and I keep harping because, Will, I'm just going to be very transparent and direct in front of our audience. One of the biggest challenges that I see with founders coming is they have a solution looking for a problem. And
Yeah.
pretty much, I look at members in the audience and I will literally ask, they'll say, this is the problem that we solve. I'm like, so you are saying that you can actually solve that problem? Well, not really. That's sort of the motivation and it's adjacent. And I said, we can't do that. And that's because someone comes up with a cool idea, and that's what founders do. So I'd really like this. I know maybe a few friends. I think this is something, and they start dreaming. And then later they try and shoehorn it into a problem that they think investors will really get excited about. And we see that a mile away.
Well, I want to respond to that in two ways.
Okay.
On the one hand, starting with a problem that you have is a great way to find a company to start. Now, but that doesn't guarantee that everybody else has the same problem too.
Sure.
I teach a middle school class, and we actually had our Shark Tank pitch deck competition yesterday. It was awesome. And in the first class, Ed, I always tell the students, and these students are in this middle school are between 5th grade and 8th grade, right? And I always say, every single one of you already has an idea that you're going to use for this class, for what crazy company you're going to start, because all of you have problems. And I do this little magic trick where I go around the room and I ask them like what kind of problems they have, and we invent companies around them, right? And it clicks immediately, and they're so much smarter than we are. And they're like, oh my God, all I need is something that bothers me and I can create a problem. The reason I'm bringing that up is because I'm saying I do like when you have something that speaks to you, that's personal. But that ain't the same as it's also a problem someone else has.
And an investor is willing to invest in, it's worthy of becoming a full-fledged startup.
You bet. We I want to say this one, right? This is when I was teaching at a high school, and one of the students, actually very brilliant student, by the way, I think is on the PGA Tour now, like literally became a professional golfer.
Nice.
Anyway, okay, then what I'm about to say will make sense. He's like, hey, this is his problem. He's like, when your family has multiple houses and you can never know where food is in every house or what staff is assigned to every house, wouldn't it be great to have a tool on your phone that allows you to manage all your homes? And I'm like, we're definitely in a private school. And I just looked around the room and everybody's like, what is he talking about, right? and I say this to say, this is like a great example of that. It actually is a problem that he and his family have, managing all their house in Aspen, their house in like whatever. I was like, but might not be a problem that lots of other people have. It'd be cool if they did, but might not be.
Right. But at the same time, you could make an argument that if he went out and validated and did find a big enough market and that could expand to something that, you could have legs on that, right?
Yeah. And so this wasn't me like knocking his thing. It's just one of those things where like, yes, it's a problem that affects you. Sometimes it's a solution looking for a problem, but sometimes you also to see if anybody else has that problem.
And let's talk about, Will, when you're talking to an investor, and this is where founders sort of trip up at the same time. They don't right size. Like you said, jump rope, you're not going to go to Y Combinator. Right. When you go talk to venture capital, they've got LPs. Like I heard the other day, it was just insane, Will, what I'm hearing. It was Jason Calacanis.
Yeah.
And he said, we need to find the next 300X founder because we're making 100 bets at $25,000 a piece, plus an additional follow-on potentially of like $150,000, $200,000. And we want to return 2 to 3X our capital. And I sat there and I said, I remember back in the day, a 10X return was amazing. I heard 50X, but he actually said 2 to 300X. And therefore, I bring that up because all the founders need to understand that if you are going for that type of money, you need to have that moonshot, totally disruptive, order of magnitude better, 10X better, not something that just improves upon something that's already out there. That's how different you have to be.
Especially as you go to raise more capital, like the stakes go up. If you're going to raise $200,000 from friends and family and that's it, this probably doesn't apply. But as you move up the capital stack with bigger, more professional investors, the stakes go up very fast.
Right. Now, for those of you in our audience, I know some of you, the what's different is very apparent, and you've already got that unlocked. So congratulations. Yeah. Cool. Some of you out there, I'm just letting you know, you really can't say we're that much of an order of magnitude different. Not to say it's not a viable startup, but the type of money that you're going for, I would just say, hey, do yourself a favor and ask yourself, really, how different are we? And that might be a good exercise. Let's move on to the next question, Will. Next one is after that, it's why you? This is looking right at the founder. What is an investor thinking when they're thinking this question?
What they're really saying is, why are you credible? Why can you pull this off? Like, what is it about you? Now, I think in a lot of cases, most founders, Ed, they don't see a lot of credibility in themselves. They have that imposter syndrome.
Right.
And what I tell them all the time is that the difference between being a solid founder that's got it all figured out and a founder who's figuring it out for the first time is zero. right? Because we're all guessing as we go. We want to believe that there's this like perfect founder that has been there so many times. Ed, I've been doing this for 31 years. I'm guessing every day as well.
Oh, yeah.
So when the investor's saying why you, what they're saying is, what are you going to bring to the table? How are you going to approach this problem that makes me feel comfortable that you can pull this off? Now, that's not a guarantee you can pull it off. We are not in the guarantee business. We're the furthest thing from it, right? And so different responses. Actually, Ed, I just had this conversation at lunch today. I was helping mentor an 18-year-old kid that just graduated high school. He's starting his own private jet business, okay? He's going to broker private jets, which is pretty baller for an 18-year-old kid, right?
Yeah.
But what I told him, same advice. I said, look, I was 19 when I started my first company, so just a year older than you are, and I had zero self-confidence, right? I mean, just like everybody does, because why would I? I had no idea what I was doing. I was like, but the confidence comes from execution. The confidence comes from just executing every single day, not being perfectly sure of every decision. Going in every day saying, yes, I'm going to make a lot of mistakes today. That's okay. I'm going to make up for them. I'm going to find out the right decision, et cetera. That's what investors expect to hear. They want to know that you're confident enough to know that you're going to keep swinging.
So many founders think that credibility you talk about has to do with, I graduated from an Ivy League school, I raised VC, I have a big exit,
right? Yep.
Right? But investors really don't care about that. If you told an investor, listen, I went and lived with my users and worked in their jobs and basically embraced the problem. I talked to 1,000 of them. I have 1,000 on my email list that I've been talking about. I understand what triggers them, their emotional needs. They've said, yes, I do business with you. Thank God for you for solving this problem. That is credibility.
Correct. And it's funny. Every founder, like even the famous ones, got their teeth kicked in at some point, right? So they all had to go through this process. Ed, I told you a story once about when I first met Sam Altman, right? The guy who's obviously, open AI guy, et cetera.
Oh, yeah.
And the way I met him would shock you, because essentially he had just sold this tiny company. I think it was to Green Dot, or was Green Dot. I can't remember what it was. It was called Looped, sorry. And I think he sold it to Green Dot. Doesn't matter. But he sold it for like $40 million, but maybe he raised as much money. And he posts it in the Hacker News Forum, okay, which is Y Combinator's kind of like, news forum, and gets absolutely killed by everybody.
Yeah.
Right? I mean, think about who this is, by the way, right? This is now like kind of like considered like one of the top 3 CEOs out there. And he got lambasted by everybody. Everyone's like, oh, you didn't sell for enough, blah, blah, blah. Like they're such dicks. And so I jumped in on that thread, and I usually don't post in there. And this is a long time ago. And I didn't know this guy from Adam. And I was like, pardon my French on YouTube, but you guys, you are the people that watch someone run an Ironman and then on the finish line tell them they didn't get there fast enough, right?
Yeah.
Get in the game and say that, right?
Yeah.
And so anyway, so I ended up defending him, and he reached out to me and he's like, hey man, I really appreciate that. Like I thought this was going to go very differently, and everybody kind of shit on me but you. If you're ever around, I'd love to buy you lunch and get together. So like a month later, I was in Palo Alto. We got lunch and I'm talking to him. Sweetest, kindest guy in the world.
Oh, yeah.
Full of humility. Who would have guessed he was going to become like open AI guy, right? I mean, like who knew, right? But anyway, my point is, even guys like him get their teeth kicked in. He's one of the most successful CEOs there are.
If you want to break into any industry and get attention, which this is all about the attention game for investors, and I use this in social media, this was something that really helped me, is if you want attention, go do some cool shit and learn how to talk about the cool shit. And in this case, for all you founders there, we have founders, Will, that come and say, I'm still in school. I'm worried. I have that imposter syndrome going on. And I tell them, go do cool shit. Like, get in the industry, mix it up, be that founder that shows up to every one of the events and talks about the problem, and you're incessantly just picking everybody's brain, and you've got an inside track, and you will find that insight and then brag about it, which is why in the YC application, they ask you, have you done any cool shit outside of your startup? What's the most one thing that you're proud of? Because investors want to see that signal from a founder that's like relentless, is just crazy, like just has got that wiring that makes them different than an employee.
I agree.
Okay, so everyone, why you? Let me tell you another story. Well, another why you that's different has to do with customer acquisition. And this is where me and Ryan got into it. We were talking, and it was a great conversation about how customer acquisition and knowing how to distribute your product is now sort of the differentiator, defensible moat compared to development. And it's just fast tracking that. And I had an investor tell me, I don't really care about development anymore, that you can build it. I want to know that you can launch it. You've got customers, you can get feedback. That literally is what he's saying. And so I was talking to a founder the other night, and he said, Ed, I'm really worried about competitors coming after me. I said, okay, tell me what's going on. All these other competitors are using AI, and we haven't integrated AI. It's on our roadmap. We haven't integrated AI yet. So we don't get to say we're AI driven or AI empowered. I said, that's not going to be a problem for you. And he was like, why? I said, because you already have 16,000 customers following you on social media. You already have thousands of people. Will, this guy in beta is about to break even, go ramen profitable. He's doing 20K MRR on his buggy beta. That's
Damn, dude.
how his customer acquisition, just like we talked about with Doug. And I
Yeah.
said, so you're telling me you're worried that you've already got customers when everyone's just building.
Yeah.
They're giving you their data to train on AI. They're going to be
Right.
entrenched. What are we worried about? Don't worry about it. And you've answered the question, why you, when it comes to investor, if you can't say I'm doing AI, but that's a perfect answer.
Yeah, they're talking about I'm actually doing it.
I love it,
All
right?
right, what's the next one, Ed?
Okay, take a look. The last one here. This is kind of a secret one. Why me, the investor? Especially
Ooh.
angels, they stop and they start to think, what can I do for this company? And I think a lot of founders miss out on that. So they just kind of blanket and just shotgun it out there. Walk us through the mindset of why an investor would think this question.
You know, it's interesting. I was processing that differently. And let me just give you kind of my version of it, because it was a bit of an interesting twist. When I was raising for the second company that I was raising money for, financial service company, Afford It, I was going after people that had already been in the fintech industry. I went for one of the original investors in Mint, if you remember Mint back in the day.
Right.
I went for some of the early people at PayPal. And part of my pitch, which worked, which got them to invest, with you in this,
Yeah,
we become 10x more of a weapon.
exactly.
Okay. Attaching their value to the outcome. And the reason I did that, and I was just being honest, it wasn't like a trick. I wanted them to understand that they could thumb the scale of the outcome of this investment. And every investor wants to believe that they have some unique contribution, superpower, part of it's ego, but part of it's real, that they have some unique contribution that they can make that other people can't make that could change this outcome. And I think when I talk to an investor, I was like, listen, you look at a lot of investments, but you can change the history of this one, right? Personally. And here's how. It's a powerful statement.
It's a great move. And let me affirm that with my own story. Talking to an investor this past week, and his claim to fame, he's a GP now. He's actually in on several deals before A16Z got in on the deal. So he got to see this stuff, right?
Yeah, yeah.
And he said, I only invest in the verticals which I'm familiar, I understand the TAM, and that I can make a difference. And all these investors, early stage ones, I asked them, so after you write a check, how do you participate? And they say, however I can. Like whatever the founder needs me to do, I just ask them, send me your needs, because if I've got insight in the market, I've got the connections, of course the investor wants to get involved.
Yeah. And look, not every investor can participate that much. They wildly overstate how much they're going to be involved. Yesterday, I was at lunch with a venture funded founder, guy I've known for a while. And he's like, look, everybody said when they put in money, like, we can give you access to this. And, we have this network. He's like, it's been 2 years. No one's given me jack shit. He's like, I've asked. He's like, no one's given it to me. So the delta between what they can do and what they do is pretty significant in a lot of cases. However, they still feel more confident about making an investment where they feel they can have a unique leverage. Actually, let me give you one more example. A very famous investor that I was pitching years ago. This is like circa 2020. No, 2001. Oh my God, I'm losing track of time. 2001. Okay, like post bubble burst. I get called in from Sequoia and Benchmark to come present to them. Benchmark has me in. Okay, and Benchmark, their claim to fame at the time was they had the single greatest return on an investment, which was eBay at the time.
Wow.
Okay?
Nice.
I'm running a company called swapolice.com that allows you to get in and out of car leases, and it's car listings. And the eBay automotive group was just blowing up at the time. They said, hey, here's what we want you to do. Before we make the investment, we want you to meet with the head of eBay Motors in 1 hour, right? I mean, This is how wired this thing is. We want you to meet with the head of eBay Motors in 1 hour, and we want him to let us know whether or not they'd buy you. Right? I mean, you don't thumb the scale more than that, dude. Right?
Yeah.
And so next thing I know, I'm at eBay and I'm sitting across from the head of eBay Motors at the time. I think his name was Simon. And he's asked, he's basically like, what's this number? What's this number? What's this number? And he's basically just running an acquisition chart to see how much of it would make a difference where eBay was at the time. And I knew I was interviewing for my job at that point. And I also knew there was no way in hell our numbers were going to make a dent in what eBay needed to do at the time. But my point to this story is that is the ideal situation for an investor.
Right.
When they can be like, my influence will make this deal happen. And there are a lot of those nepotistic deals in investing.
Let me give an insight to the founders listening to this. When I was GP and we were trying to decide on investments, we had 3 divisions in our company. First division was, how do we source capital from LPs? We're salespeople at heart. We got to go out and get that bacon in there into the dry powder, the war chest. Second, how do we source deals? Both of those are a huge pain in the ass as it is. Just completely burns you out. But Deal flow is going to be the major thing. So we got to get out there and show up at all the events and get people
For sure.
referring to us. But the third division was how do we nurture the deal to an exit?
Right.
And
That's the goal.
exactly. And so many founders don't look at that potential with the investor and don't do that research and don't allow the investor to think about, hey, thumb the scale. Let's do some research. Let's talk about what that looks like. At the same time, Will, that's why a lot of investors will say no, because even though you might be a baby unicorn sitting in a rocket ship, the investor's going to think to themselves, you know what, it doesn't fit into our thesis. I can't sell it up to the LPs or the investment committee, and we can't really thumb the scale as much. Therefore, it's more of a risk for us, and you might be the best startup in the world.
Yep, I agree. I agree.
Right? So, well, what's your advice to our founders that are like, man, this is intimidating. How do I address this? What do I go out and do? How do I present something? And we're here to support you, but give everybody a nugget. Like, let's inspire everybody what they should do right after this conversation.
I think all the investors trying to say, right, with all these questions is just help me be comfortable. I've got a million people that I have to talk to. I have a short window where I have to get to know these people and build some credibility. Help me have some credibility in you. Just give me honest answers, show some humility, also always a big part, and don't make me feel like I'm being sold. Make me feel like I'm being trusted. Okay. And I think
that's a good one.
That is a huge difference. Some of the ways that I would build trust in, and these weren't like techniques, this is just how I communicate with humans, is vulnerability. So when they would say, hey, why now? I'd say, well, for whatever business this is, here's where I think things are going well. But if we're being honest, like if they go that other direction, then we're in trouble. When I say that, they understand that I'm not just blowing smoke, that I'm actually giving them an honest assessment of what it would take for things to go right and what could happen if they go wrong. I think little bits of vulnerability like that, or one of my favorite things in a meeting is say, I don't know, right? Now, when I say I don't know, I always follow up with, but I'll find out, right? When somebody says, what's going to be your CAC in year 3? Right? I'm like, and maybe I don't know off the top of my head. I'm like, I don't know off the top of my head, but I know we have the information. Take me 2 seconds to look it up. But saying I don't know is a vulnerable state, and I'm comfortable doing it. Ironically, I got way more comfortable being vulnerable as I got more confident being a startup founder.
That helps, definitely.
Comes to the territory, yeah.
My advice to everyone here is if you can't answer these questions for that particular investor, it doesn't mean you're a bad founder, you're not fundable. Move on, don't chase. Because there's so many investors out there and you're going to meet so many that don't fit. And if it's not right up their alley, it's not worth the energy to try to convince them. Just be like, next, I'm going to find an investor that likes my space, who's interested, has experience with the problem. Don't worry about it. Don't sweat it.
I've never tortured an investor into an investment. I've never found somebody that didn't understand my space, didn't like me, didn't whatever, and somehow wrote me a check anyway, right? Like these things have a cadence. You meet an investor, you have a connection with them. Like they like you, you like them. They get the space. They've been wanting to invest in the space. This is something where they've made money before. All of these things tend to work in that. It's kind of like dating, right? You don't sit down with somebody where you both hate everything about each other and you're like, man, we should get married, right? That happens later.
A lot of experience. Hey, we are helping out with dating apps for all that stuff here. We got them all across the board. Will, this has always been great. It's been illuminating. And I totally forgot about the Sam Altman story, but just kind of goes to show everybody in the community sort of what the intellectual and social capital we have here at Startups.com, which is fantastic. Yeah. Will, I want to end off, and I know you've got this same thing too, a heartfelt request to everyone. Listen, go help another founder. Will, you and I were talking about this. If every founder that learned from us went and passed on that knowledge and say, hey, I learned this, let me share and let me give you access, man, our community would thrive and we'd be so much more fulfilled. And so it's kind of, I'm going to say a challenge for those of you participating. If you're on YouTube, like, comment, subscribe, always helps. But most importantly, share with another founder. Will, same sentiment, last word to you.
Yeah, the founder I was meeting with today, the 18-year-old, at the end of the lunch, he was incredibly grateful. And he said, hey, well, I'm just curious, why were you willing to help me today? And I said, because I know you're going to help a whole bunch of other people.
Right on.
And I was like, all I want to do is arm you with as much information as possible so you can take that to your friends, to the people that you meet, the same young 18-year-old that you'll meet someday when you're an old fogey like me, and arm them with that information. So if I can arm you with more information, I've won.
Will, I don't know about you. I never got any of this stuff at 18 years old, man. Where were you?
I got so screwed on this deal, Ed. I got none of this. No one has said cool stuff like that to me. They were like, go figure it out, you idiot.
I love it. All right, that's it for us. Remember, we're here every Tuesday, Wednesday, and Thursday. We're going to be back covering these topics. Make sure you participate. We want you to win that pitch competition for those of you out there. Will, always appreciate you. This has been fun. I'll see you next week.
Been awesome. Bye, everybody.